In the recent meeting of BRICS, BRICS is an acronym for Brazil, Russia, India, China, South Africa, an organization that was formed about a decade ago to bring together a group of major developing countries to work together on common issues of concern. And since its establishment, in addition to regular annual meetings at the head of state level, we've also seen the establishment of a new international organization called the New Development Bank, the NDB, based in Shanghai, with the BRICS members as shareholders. At the most recent BRICS summit in South Africa, there were significant discussions about the future of the organization, in particular bringing in a series of new members, but also significant discussions about the way that the international monetary system works. And I think this is a topic that we've spent a lot of time on and that I want to bring back up. And I think particularly over the past 2 years, since the Russian invasion of Ukraine, we've seen increasing discussions internationally about the role of the US dollar and how we might be able to build a better international monetary system. And in a new paper, my co-authors Ross Buckley, Dirk Zetsche, and Anton Didinko look at this question of the evolution of the international monetary system, monetary hegemony, in other words, the tendency over the past several thousand years to, at various points in history, have a dominant monetary instrument for international transactions, the role of technology, and how we might be able to better design the international monetary system. And when you think about the international monetary system, you can think about money as a unit of account, as a store of value, as a medium of exchange. These are the roles that money plays. But the key when we are talking about international transactions is that the monetary instrument is acceptable to people in different places, different countries by definition. And of course, countries around the world issue their own monetary instruments. And today, those monetary instruments are generally what we call fiat currencies. In other words, they are pieces of paper which are backed by nothing more than the government which is issuing them, usually via a central bank. But if we think back historically, money throughout most of human history has not been fiat money. It has been various forms of, in particular, commodity money and metal-based money, with most frequently gold and silver being the dominant monetary instruments. But one challenge with gold and silver is the fact that you need to have some level of standardization, both from the standpoint of amount as well as quality. In other words, it's one thing to simply say that I'm going to give you 5 ounces of silver, and each time we have to do a transaction, we have to pull out a set of scales and weigh the amount of silver. Governments, sovereigns, have come in over the past several thousand years with the creation of coinage. In other words, a sovereign takes gold or silver, which is your money, and makes it into a standardized form. That standardized form, as a result of the sovereign process, and very often the picture, the stamp of the sovereign of whatever country, empire, state that it might be, gives some level of assurance about the amount of gold or silver, as well as the quality, the purity, the percentage. And over time, we've seen a variety of different monetary instruments used commonly in international transactions. The 20th century has been somewhat different in that we moved to a system based on paper money backed by gold up to the 1970s, and from the 1970s to fiat monetary arrangements. And in that system where you had paper money backed by gold, the dominant monetary instrument has emerged as the US dollar. Emerged both because it has been useful from the standpoint of a common denominator for cross-border transactions, but also because of an international institutional framework built around, in particular, the International Monetary Fund, but also supported by international payment systems which have embedded the US dollar not only as the simplest method for making transactions, but also in many cases as a formal common denominator for transactions. Throughout history, if we look at periods of monetary hegemony, they can last for extremely long periods of time. And at the end of the day, it is really about a combination of trust in the issuer of whatever the monetary instrument may be, and convenience. The fact that it is something that is easily usable by parties in different places. And if we look at today, these factors have certainly underpinned the role of the US dollar. But what we ask is whether or not a combination of political developments and technology is changing the way in which monetary hegemony works. And prior to 2022 and the Russian invasion of Ukraine, there had been, over a period of decades, many different criticisms and discussions of the role of the US dollar in the international monetary system. But generally speaking, simply as a matter of embedded convenience and institutional structure, the US dollar had continued to be the dominant instrument. But if we think about Ukraine, the US-led sanctions have caused a wide range of countries to question whether there may be risks inherent in relying particularly on the US dollar-based international payment systems. Now, the thing that has changed over the past couple of decades has been a technological revolution in money and payment, the digitization of money and payment. And we argue that this technological revolution in money and payment means that now it's possible to not necessarily rely on a single instrument out of convenience, but rather to use technology to easily transact and compare a variety of different monetary instruments on a cross-border basis. From the standpoint of the BRICS, they are discussing whether or not it may be possible to create some sort of common monetary instrument across the group. But as we've seen from experiences in the context of the EU with the creation of the euro, the sovereign sacrifices which are necessary in creating a common monetary instrument means that there are very few states that are actually willing to do this. Where we see much greater possibility is in the context of developing electronic payment rails, which make it easier to deal in multiple currencies on a cross-border basis. And if we think about where the future of the international monetary system may very well be, it might not be in a single monetary hegemon, as we've seen throughout most of human history, but rather in a technological framework which allows a plurality of different currencies from different countries to be easily used for international transactions.